For those who are new here, consider subscribing as I bring you new content every week. I know I've been away for a long time, but today I bring you something that many of you might know about or you have heard about. But if you're a newbie or a new trader in the Forex market, this might interest you. So just watch the video till the end to grasp all the concepts and all the ideas of this strategy. So I'm just going to lay it out. As you can see here on the screen, we are going to be looking at supply and demand. Actually, you can trade only supply and demand zones, all right, and be very profitable in the Forex market. I'm telling you, you can trade only supply and demand zones to be very profitable in the Forex market. This might be the only thing that you've been waiting for. If you can master supply and demand, you can actually trade profitably. It might be the only strategy you might need. In the Forex market, there's something we call a resistance, all right? And we are going to look at resistance and supply because these mean the same thing, all right? So this is a zone. The resistance area is a zone where the price has failed to go higher at least twice or thrice. Normally, the more the times the price has failed to break above or create higher prices, the better the chances to trade around that zone. And I'm going to be demonstrating to you how that works, all right? The resistance zone also indicates more selling pressure than buying pressure. And I'm going to show you how that is on the chart here. Just watch the screen and see how that is demonstrated or illustrated for you to understand, especially for those who are new in the Forex market. If you're a newbie, okay, this lesson is for you. It indicates an area of selling pressure or where selling pressure is more than buying pressure, okay? It indicates where that the bearish move is expected, all right? It's more like the bearish pressure is expected to be more than the bullish pressure around this area of supply or resistance, all right? And I'm going to be showing you that on the chart. It indicates the asset is overbought or expensive. You know, as the asset is overbought, it becomes expensive and people lose interest in buying it. And so for those who had bought it before, they start dumping the asset or they start selling it. And when they start selling it, the price drops further, okay? So that's why at supply or resistance, people want to always sell, all right? And I'm going to be showing you that also. So market sentiment is bearish, forcing more traders to sell, thereby drop in the price, okay? Especially at the resistance. And I'm going to be showing you also the entry criteria at the resistance level or supply level. So this is how it may look like, okay? You can have a resistance zone like here. Let's say the price was rallying to the upside, okay? You have higher highs and higher lows, and the price is rallying to the upside, okay? In this scenario, you can see the rise in price, okay, to the upside. And then you get to an area where you have relatively equal highs, okay? Like you have that is a high, and then you have a drop in price, and then you have another relatively equal high, and then a drop in price, and then you have another high, something like that, okay? And then there is a change of character in that fashion, okay? I'm going to be explaining to you how all this works, okay? So in this lesson, we are going to be using one chart pattern for our entry, which is a head and shoulder and inverse head and shoulder. So for our lesson today, we are going to be using head and shoulder for the sell and inverse head and shoulder for the buy. Okay, so this is a resistance level here, right here. Okay, this would be a resistance. This was rising, or the market was going all the way. This was a bullish market. But then when we get here at resistance, we see a reaction, okay, where the price action forms a head and shoulder. You can see that the price could not break above this area, okay? This area then becomes a resistance zone. The price tried the first time to break above, it could not, okay? It formed this area here. and then tried the second time, it could not break above, and then the third time could not break above, forming relatively equal highs and equal lows, all right? And then we see price dropping from that resistance zone, okay, all the way down here. Why did the price drop? The price dropped because most traders think the price or the asset is overbought. So the price is expensive, or it is expensive to buy. So the price has risen so high, many traders want to sell that asset, especially if they bought it before, they want to sell it, okay, at a high price so that they can make a difference, a big difference. So that is why at resistance here, you find that the price begins to drop because they are looking to sell, okay? They are looking to sell at high prices, so the price begins to drop. It's basically a concept of supply and demand. When the demand is so high, okay, the price goes up. Here is a supply zone. Resistance is also our supply zone, okay? This is also area of supply. You can call that also area of supply. Why? Because at resistance here is where there is a lot of supply. And so where there is a surplus, like there is a lot to sell, you find that the price begins to drop, okay? There's a lot of supply. So you find that the price begins to drop because there's a lot of that asset, okay? It's basic economics, right? So now we see here at the resistance level, we see that here, now we begin to plan to execute our order at resistance here. So we look for chart patterns. Our entry, the first thing we look for is a chart pattern indicating a reversal from there, because now we are looking to sell this asset from here. We are looking to sell that asset, okay? So we are looking for any formation that indicates downward pressure. And we already see the chart pattern here forming a head and shoulder. We can see this is a head, and that is the left shoulder and a right shoulder, and there is a neckline. This is a neckline right here. So once that neckline is broken, there is a change of character. All right, that is the second thing we are looking for for our entry criteria, a change of character, which means the price action is changing from bullish to bearish. Okay, so we are looking to sell this asset below below that neckline. Okay, where there is a change of character here. All right, so when we see that change of character at the neckline, so we see here change of character at the neckline. All right. So at the neckline here, we are looking to sell, but we wait for confirmation still at the neckline right here. We wait for a confirmation right here to sell. What confirmation are we waiting for? We wait for some kind of break below, which has already happened, okay? And then we are waiting for a retest around here, and we are looking for candlestick patterns, either bearish engulfing candle or some kind of candle indicating bearish momentum. All right, look for momentum candles, okay, big momentum candles which indicate downward pressure at around this area. Okay, so after the retest, you look for those momentum candles, either with a bearish engulfing candlestick pattern, and then you are placing your sell order from here. That is when we now execute our order right here. Okay, we can place our stop loss right here, and then we can target a 1 to 2, okay, here. So always wait for a retest, okay, and then you can place your sell order all the way down here. So this is how the strategy works. Simply using the resistance or supply area, you can sell with confirmations of chart patterns. In this case, we are using the head and shoulder chart pattern, which you can see here. This is the head, and then the shoulders, and then the neckline has been broken of the head and shoulder candlestick, chart pattern. And then you are looking for change of character, indicating downward momentum. And then you're waiting for some kind of retest and candlestick pattern indicating downward pressure. And then you are looking for those momentum candles, the big momentum candles, all right? And then you execute your sell order. When you are buying, you buy at a support area or demand zone. So the demand zone, in this case, would be, let's say this is our, so demand is usually high when the price of an asset is low. Okay, so let's say the price action was forming lower lows and lower highs, and that price was dropping. The price of the asset was dropping for some time, and then it gets to an area where the price cannot break any lower. That becomes a support zone or demand zone. So this is our support. Okay, that would be our support or demand zone. All right, it's basically an area on your chart, okay, where the price could not break below or form lower prices. Okay, the price has been dropping for a long time. This is a bearish move. Okay, the price has been the trend has been bearish for a long time, and then it gets to a point where the price cannot break any lower. Okay, at least once or twice we have this kind of formation. Okay, this is the second time, and then we have the third time the price could not break below. Okay, and then we have this kind of move. All right, just following our strategy. All right, so in this case we have the price could not break below this zone here, indicating that there is some kind of buying pressure. Why are people considering buying at this point? Because the price has been dropping for a long time, so it is cheap enough, it attracts buyers. That is why people are considering to buy at this point. So now at this area here at support zone, you find that the price cannot break any longer below, so there is a lot of buying momentum. Okay, there's a lot of buying momentum. So here in this lesson we are using our chart pattern as a inverse head and shoulder in this case, because we are going to be looking at buying. Okay, this is a support zone, so there is a high demand here, so pushing the price even higher. You know, when something is in high demand, the price rises. So because it is so cheap, so many people are interested in buying, so that pushes the price even higher. So you are looking to buy this asset at a demand zone. Okay, this is quite a simple principle. Once you see this happen, okay, you are expecting a bullish move here once the price has failed to break below this area. And so now what we are looking at is a chart pattern entry criteria. Now our chart pattern in this case, in this example or in this lesson, is an inverse head and shoulder. You can use the triple bottom, double bottom, whatever chart pattern you want to indicate a reversal or move or the bullish move at this point. Okay, but we are using this time we are using an inverse head and shoulder. We could use a double bottom or a triple bottom, but in this lesson we are using a head and shoulder chart pattern. So it forms around here. Once you see this happen, you wait for the break above the neckline of that inverse head and shoulder pattern. That indicates a change of character right there. Okay, that would be the neckline or change of character. Okay, right there. So there has been a change of character right there at the neckline. And so what you are waiting for is a retest of that neckline, some kind of retest at the neckline. And then after the retest, you are waiting for momentum to the upside. Okay, either bullish engulfing candlestick pattern indicating a bullish momentum to the upside. Always wait for those large candles which indicate a bullish momentum at this point. All right, after the retest. So after that retest, you are placing your buy order, okay, at the neckline right here. So you go to your lower time frames and you place your buy order, okay, and you target a 1-to-2 or 1-to-3 risk to reward ratio to the upside, okay. This would be your buy order, okay, to the upside. So you are simply using the principle or the concept of demand and supply to buy and sell. So in this case, you would be buying, and that would be a winning trade for you. So always wait for confirmations. Follow the entry criteria, chart pattern, identify your chart pattern, okay, indicating a change of character. And then they look for candlestick patterns, okay, look for candlestick patterns which indicate the direction, all right, and then wait for a proper retest, and then look for momentum candles in that direction, and go to your lower time frames and execute a buy or sell order, okay. It's as simple as that. So we are going to look at what happened in history on the real charts, and that would be the end of our lesson, all right, today. All right, so here, okay, if I'm to mark this out, this would be a resistance level right here, okay. As you can see, the price previously, as you can see, the price could not break above there. We had an uptrend, but when the price got here, we see the resistance here. The price could not break above this zone. So resistance there, obviously we can see a resistance over there. So the second thing we are looking for now, since we have seen the resistance, we are looking for a chart pattern for our entry to indicate downward momentum, okay. So we can see a head and shoulder pattern already. I'll mark that out. This is the right shoulder, okay. That would be the left shoulder, I should say, and that would be the right shoulder. That would be the head right there. Consider, it doesn't have to be picture perfect, but you can see the pattern is formed. That's the head and shoulder chart pattern, all right. It's the head and shoulder. So this is the neckline right here, okay. This would be your neckline, okay. That would be your neckline, and then there is a change of character right there, indicating downward movement, okay. So there has been a change of character right here, okay. The price is going down. All right, so what we are waiting for is a retest, a break below and retest, okay, which happened right here. So there was a break below here, and then we see a retest over here, and then the price dropped even further down. So this move is what we are looking for, okay. So we would place our sell order after the retest here. Would look for our momentum candle. You can see this candle is a momentum candle, this one, okay. After the retest, would place our sell order after that momentum candle. It's a bearish engulfing candle. Would place our sell order after that bearish engulfing candle, okay. Do this on lower time frames and place your sell order just like that. Target a 1-to-2 or 1-to-3 risk to reward ratio, and you can see this trade would actually win, all right. So that's how you would trade this, based on just resistance, okay. A resistance is a supply zone. This is a supply zone, guys. Okay, this is supply. The price becomes very expensive. People begin to sell, and then the price drops, all right. There is high supply, so it's in abundance, so people are selling, so it drops the price. So this is how you trade this. You can see the entry criteria. We have considered the chart pattern, that is a head and shoulder chart pattern, and then we can see the change of character, and then we are selling after the retest of the neckline. We see this momentum candle, bearish engulfing candle, and then we are placing our entry, and we are riding that all the way down, okay. All right, so here we can see that there is previously a support area or demand zone where the price could not break any further down. Okay, 3 times it tried to break further. You can see previously a downtrend, but when the price got here, it could not break below, and then went up and then returned, could not break below this area, and then went up again and then could not break below this area the third time, and then it continued further up. But before that, we identify this is our support area. The price could not go any further down. Okay, the asset is so cheap it attracts buyers. So when that happens, when people are interested in buying some one asset, and so many people are interested, the price of that particular asset goes up. Okay, so what you as a trader would be looking to do is to buy that asset, because when the price goes up, you are benefiting. You are buying cheap and then selling high. All right, so here you are looking at buying at a support zone, or you could call this also demand zone. Okay, this would be a demand zone. All right, so we are looking to buy this asset right here, but our entry criteria, we want to look for a chart pattern, and in this lesson we are using inverse head and shoulder for the buy. So to identify that chart pattern, you can see here a left shoulder. All right, and then we can see the head is right here, and then the other shoulder is right here. Doesn't have to be picture perfect. This is what you see. This is, you have to train yourself to identify that chart pattern. Okay, and so after you identify the support zone, all right, price could not break below, so you are anticipating to buy this asset. So when you see this chart pattern, inverse head and shoulder, that indicates a possible direction change, all right, or trend change from bearish to bullish. So you are looking at buying above this neckline after the retest. So always wait for a retest after the break of the neckline. So this is the neckline of the inverse head and shoulder, to buy at this point. Okay, so what you're waiting for is a retest. Okay, there was a break above the neckline, and then there is that retest of that area. Okay, always wait for that retest. All right, so after the retest, you are looking for a momentum candle, and we can see this bullish engulfing candle. You can see this bullish momentum candle right here. Okay, that is the one that would give you your go signal, all right, to go long. Then you place your buy order right there in lower time frames. Place your stop loss below here, and target a 1-to-2 or 1-to-3 risk to reward ratio all the way to the upside. And as you can see, this trade went in that particular direction, and this was a good win. All right, so this is how you would trade this. Okay, so yeah, so just with support, that is demand, and supply zones, you can actually trade only that, and it would be a winning strategy for you with supply and demand zones. Especially for beginners, this is very simple for you to follow, and you can backtest on your own and see how this is viable in trading. All right, so thank you very much for watching this Gideon Forex Academy. For those who have not subscribed, consider subscribing to this channel, as I bring you content that is free. It's only fair for you to subscribe, as you get free content on this channel. Until next time, thank you.